Hey guys, it's BA here, and it's Tuesday evening, about 9:35, December 13th, 2016, and I've got to put this alert out. I know everybody was busy tonight, traveling on the road, working late, so I wanted to put this out. This is something I wanted to cover tonight. I want to make sure you guys know what I'm doing. I've been a good boy. I put that little Piker short out on the financials a week ago. And hey, that move today was unbelievable in the stock market. I mean, up 18, 19 handles going into a known Fed rate hike. Um, there's something going on, guys. I don't know what it is. The S&P, and you guys know I'm just as bullish as ever, and I hate it. But enough is enough. Things are starting, from what I'm seeing, things are starting to fall apart. Um, And we know on the upside, when things start falling apart, it takes them, maybe 3 months to really fall apart. When things fall apart at the bottom, it takes 3 hours to reconcile itself, and then it's all hunky-dory again. But we've had such a strong up move that, going into this announcement tomorrow, I have told you that this is the year of the 3 standard deviation move, and the stock market does exactly what nobody believes it's going to do, or what everybody believes it's going to do. The market does the absolute opposite. I'm going to put a bullish gold trade on and a bearish stock market trade on. Here's how I'm going to do that. So let's take a look at the chart just to show you the sheer. This is the SPY. Just the sheer lunacy of that move today and how this market looks. It's just unbelievable, guys. It really is. Yeah, let's stay on this chart here because I want to start with this. I mean, this chart doesn't even really show the low that the futures were in, but I mean, I haven't seen a move like this in the S&Ps in a very long time. So I heard Sosnoff mention that he's seen one or two like this in his trading career. So they don't come along very often like this, even in the bull market extremes, like what I'm expecting to happen. Not in the S&Ps. You see the move up, but you don't see the straight up parabolic move up like we're seeing right here. But here's what I'm looking at. We've had a couple of instances where last week, 2 days in a row, as a matter of fact, where the stock market screamed higher and the VIX went higher with it. That ain't supposed to happen. So occasionally it'll happen once, but not 2 days back to back. That was just very, very unusual. And now look what's happening. Call your attention down here to the middle pane. This is my volume model, and it's starting to fall apart. And you guys know, I've told you time and time again, that is a very strong warning when a market is in a position to roll over. We know they don't roll over from a top like they reverse from a bottom. But this is at least the start of it. And I got to put something on. If you haven't shorted this market yet and you've been itching to, this has got to be your point in the face of this Fed move. I'll probably end up regretting it, but I'm going to show you the two trades that I'm going to put on and how we can minimize the losses to virtually nothing if we're actually wrong in this trade. So here we go, straight up. Volume model is confirming that the buying's not going with it. There's only a few stocks carrying this thing higher. It's the people buying the futures and trickling into a few of these stocks is probably what's happening. So that's the VIX and the S&P decoupling last week is one strike. We've had a Sentiment Trader reported that the VIX decoupled for the first time since 2012. Over the past week, they're indicators. So we're starting to see a lot of these VIX decouplings come apart. And I've got my extreme model here that just says, "Uh-oh, you're in an area, man, where this thing it may not roll over, but you ain't got much more to the upside." So a lot of times when it does this, it'll just grind higher, a point a day, 2 points a day. It sells off in a crash, 2.5 points overnight. then it rallies back up. That's the kind of action we're accustomed to. I don't know if it's going to be like that this time. We've got an explosive announcement tomorrow. I'm going to scroll back through the chart and show you every time we get an extreme here and a breakdown in the volume model. It only happens a couple of times, and you'll see firsthand. Pay attention. Red bars down here on my extreme model equals extreme high in the S&P. It's maybe within 1 or 2 thrusts of making a high before it recovers. And I want you to look at where we are right now. So we'll just mark this low right here, 227 in the S&Ps. We'll go back and reference this again. Takes a lot to move that S&P up into extreme territory, guys. I'm all the way back to 2012 right now, and I haven't had. There we go. Okay, now we have one. All right, so you see the market right here, kind of huge run up, just bam, just like over a month and a half, straight up move off the lows. Didn't even think twice about it right here. Just ripped up higher. Another rip your face off rally. Got up into here, and then all of a sudden, look at the volume model. It's breaking down. Look at the extreme. Does this not look exactly or very similar to what market we're in right now? And this was November time frame. So we had that little probe back up, and then she sold back off. Nice little pullback right there. It was 40, 50, 60 point. 60, 65, 70 points in the SPX. Just a nice little pullback before it ratcheted back up again. But look at this high. I want you to look at this, guys. This is what false moves to the upside look like when you're looking inside these things. The volume model never moved on that huge thrust up. And look at this bar right here. Look how far it ran up before it settled back. So this was news driven. Could have been a Fed announcement. Who really knows? But the volume model said, you know what? I don't think so. And then she rolled back over again. All right, so let's... here we go, but we haven't gotten the higher price in the stock market in this thing bleeding down. So we've got the extreme here. So we make another high here. The volume model makes a high. We make another extreme. All right, so we mark this one. We pull back a little bit, zip higher. All right, now what is our volume model doing at this new high? Hey, look, it's breaking down. Completely breaking down. And look, we've got another extreme high in the S&Ps. Guys, these signals, this is back in, this is 2014. I'm sorry, this is 2014. Yeah, so, but look what happens there. So extreme here, model keeps breaking down. We make one more, 2 more little thrust up before we get a huge collapse down. And let's see if we can find one more instance. We triggered it right here. This one's a little tricky. That one didn't follow the model at all. So that one really doesn't count. We're looking for those where we make an extreme, market goes higher, and then we start breaking down on the volume model. So you see it takes a couple of, some of these have gone on for almost another month higher. Before they eventually collapse. So I'm going to take a stab here, guys. This is a good shot, good place to do it. So you know what that means. 9 more weeks of straight up movement. That's usually when I get involved. We've got at least 9 more weeks of straight up movement. So anyway, that's the stock market. That's what I'm looking at in the stock market. So we've got a lot of things in the VIX that just show where this thing could potentially turn. And now it's time to take a poke at it, right in the face of this Federal Reserve meeting tomorrow. So what I want to do is I want to take a look at this. I'm going to cue the VIX up. And I want to show you the chart of the VIX first so you get a reference. And alright, so you see here the VIX has been going up, and the stock market's been going up, so it ain't supposed to work like that. All right, so we're going to try and take advantage of it. Um, and I'm going to load another study set on here. All right, so you can see we're at an extreme low. Um, every time we get extreme highs, extreme lows in this model here, it's a point where it's about to turn. So we get over the bubble there, that marks the high. We touch it here, that marks the high. So this is just a really good model. So we get down down past the bubble here. We get a little bit, make another low, and eventually she ratchets back up to the upside. So time for a shot. Time to take a shot. So here's what I'm going to do. I am going to, let's see, make sure you can see this because I didn't do my normal template. All right, so what I've got going on is I am going to buy a debit spread. All right, this is what it looks like. I'm going to buy the 17 calls and I'm going to sell the 19 puts. I'm sorry, I'm going to buy the 17 calls and sell the 19 calls. So I'm going to do that 10 times, 10 lot trade. So my risk on that is I've got a $2 wide spread, so I'm risking $400 for a potential $1,600 shot. Okay, so what if this goes bad? All right, you can see right now we're only tying up $400 in this thing. Excuse me. So if we're dead wrong in this trade right here, we should be able to go in there and sell calls against this thing pretty soon and cinch it off. So here's what this trade looks like if I get in between the 17 and 19 calls and sell the 18 calls. I'm only going to do that 4 times. Look at what it does. It cinches this baby off. And we can adjust that to where it's break even, and we're only using $900 in buying power. That's it, guys. I mean, we can literally cinch this thing off for a $60 loss plus commissions if we wanted to. If you want to increase the contracts and build something like this, then you can do that as well. You can ratchet yourself a profit in, no matter how low the VIX goes, in case we're dead wrong in this thing. And check this out. Hey, you still have a bubble up here for this thing to land in case it does get up there. So, and hey guys, listen, if the VIX gets up in that area right there, don't worry about it. I mean, honestly, it's going to fall back down into that range. So that's what I'm going to do. I'm going to put the trade on. This is how I'm going to protect it in the event that I'm wrong. I'll know I'm wrong maybe next week, I think. I'm expecting something to happen within the next week to week and a half. So, if it's not, if we rip 40 handles higher tomorrow, oh my gosh, it's ridiculous. So here's what I'm going to do. I'm going to go ahead and put this trade on. Right now it's going for 40 cents. But I'm just going to put it in my queue on a good till cancel order. And I am going to put it in for 25 cents. Oh, let me change that to good till cancel. All right, so that'll be in the market tomorrow, just in case we get a little pullback, out of this Fed announcement. So let's look at gold next. You can do this on GLD if you want to. So what I'm going to do on gold is I'm going to buy. I'm going to put buy an at the money debit spread, and I'm going to do that 5 times. I'm going to risk $12.50 to make $12.50. Hey, let me go back to that VIX trade yet. I didn't tell you which expiration cycle we were trading. We're in the 11 January 17 expiration cycle for the VIX. That's the 11 January 17. I think it's got like 28 days to go, something along those lines. I'd say go out. Don't go inside of what I just did right there. If you do anything, buy yourself some more duration in this trade. Because one of the things sentiment traders said that every time that they see the VIX, that they've gone back in history and seen the VIX do what it's done relative to the S&P, the constant that they've seen is that volatility spikes. At least the least it's ever spiked was 24%, and the most it's spiked is 74%. So somewhere in that range of 24 to 74 is what you can expect in a VIX pop in these types of conditions. All right, so that should wrap up the VIX. Now let's go back here and take a look at gold. All right, so again, I'm going to, in gold, I'm going to go a little bit tighter because gold is going to move one way or the other big tomorrow, I think. I think it's going to have a huge move one way or the other. So I'm only going to go with 2 weeks. I think there's 14 days left in this trade. And I'm going to buy the 1160 call, and I'm going to sell the 1165. So I'm going to do that 5 times, 1250 risk, 1250 on the upside. All right, so we've got very little, well, we've got 1250 tied up in capital in the trade. And again, in case I get in trouble in this trade, I'll go in there and try to cinch this trade off and sell some calls against it. So it'll look different, if gold's down $40, the chart won't look like that, but we can at least try to minimize our position if gold just falls completely out of bed. Gold's been just swamped. I mean, it has just been, the rug has been pulled out from under gold. So it wouldn't surprise me a bit to see a nice rally. Again, I have no idea what's going to take place in the market tomorrow. I never do. So don't think I know I have some inside information. I don't, guys. I'm just trying to play the extremes. Take advantage of what I believe is an area where the pot odds favor a pop in volatility over the next couple of weeks. And gold's at an extreme low as far as everything I measure shows. Now, can it go lower? Absolutely. But I think right here in the face of this Fed move, it's an interesting spot to try to put a long gold trade on. So anyway, I'm going to put that trade on. I'm going to try to just let it stew overnight, and I'm going to put it in for just $2. So I don't think I'm going to get filled on this because that's way out of the. But of course that changes. If I were to get filled on it, then I'm only risking 1,000 to make 1,500. So. All right, so let's confirm. Let me edit, make sure I'm straight. Limit, good, $2, and bam, bam. All right, guys, those are my 2 trades, and I will try to ride my crude trade into glory. Yeah, we'll see how that goes. Try to ride the crude trade into glory tomorrow. So we got a little tick up in gold right now. So I'll check. I'll probably get up in middle of the night, maybe about 3 o'clock when the Euro guys come on board and see how they're treating gold, and maybe adjust my position then. So anyway, hey guys, I just wanted to put this out. Make sure everybody's got this. If you got some trade that you want to put on, for a shot tomorrow, you can do that as well. I had a couple of things I wanted to go over tonight for shot taking structures, but hey, we'll do that again. We'll have some more of these pop up, over the course of the next year. So anyway, guys, have a good night, and we'll talk to you later. This is BA signing out.